Good evening, Redbox family. Hope everybody's doing good today. I know it was a wild day, just as I expected it would be today in the market. All in all, I would say that we saw a lot of consolidation. And guys, we probably needed it to cool off a bit. As bad as it sucks, I'd like to finish in the positive, especially where the market was so green. But all in all, I'm not very concerned. We held up 11, which is what I needed to see from my own personal concerns, which we did. And I feel confident going into tomorrow that we see another run because the T+2 settlement for all of those options that were in the money are due tomorrow. So they need to produce them, guys. Which is why I thought that today we may see a little bit of a dip because they're trying to scare people out of this play. There's a lot of FUD going on in the community, and they're going to bank on that. And like I said, please, please, please watch the video that I put out this morning regarding the warrants, regarding my personal concerns with the filings, because I am still in this and I am still bullish. I haven't sold a single share and I'm not planning on it unless I see a big change, guys, because I believe this play is not done yet. So my title, should we sell or buy the dip? Right now, I am keeping with the amount of shares that I have because I have my radar on, but I could potentially buy some more if I start seeing things going in the upward direction. But I'm confident with my position and what I have now, and I'm not sure, but do I think this would be a good opportunity to buy the dip? Not financial advice, but I would say that as long as we can hold 11, that this play is very strong. And might we temporarily dip just below 11 to like 1090? Yeah, okay. But guys, if it starts running down, then I wouldn't be surprised if they try to pull it down to, back down to the 9s. It's possible, but I honestly don't think we're going to see that tomorrow, and I believe that it's more likely than not that it will run before that happens. But again, all it would take would be another filing release with, them saying, oh, we are allowing another million of those locked up warrants to be sold, which I am still puzzled by how warrants being locked up can even be allowed to be exercised. There's a lot of stuff going on here that I am concerned about, but on the same aspect, there's a lot of bullish things that I see huge potential in our future. And, I'm seeing in the community, those people that have that bullish tendency towards this ticker like I do also have very strong sentiment as to where this can go, guys. And there's some things that I want to address, but first I want to take a look at the Ortex data because I think that you guys need to see where we stand on that. And then I am going to also address the failure to delivers that we have coming up. And we'll go from there because I'm probably going to add a few more things to this video, but I'm going to try to keep it shorter because I think I lose attention span when I go on for 15-20 minutes. So let's start with Ortex. This is today's live Ortex update. Currently, our short interest is 19.76% of the float. It went down by 0.5% today. And the estimated shares short are 34.85 million, which, as you can see down here, is up from the last exchange reported short interest on May 31st, which was 33.28 million shares short. This information, guys, comes out delayed, so it came out on June 9th, but that's our last update there. So as you can see, that the share short has gone up, and just because it's down 0.5% today, it's still very, very high. Anything over 10% short interest is huge, guys. We're at 19.76%, and the cost to borrow is, on average, 120.33% with a max of 357%. So, this is definitely lining up nicely for a potential to make a massive run in the near future, guys. Like I said, I really believe that it has a run coming. We just need to get out of this zone that we've been stuck in under that $3 range. I think once we break through, especially once we get through 350, we're going to see massive changes coming, guys. So I'm bullish. Just wanted to give you this, and I have a whole bunch more to follow. So let's get on to the next part. What we're looking at here is stock Sarah and the failure to delivers on BBIG. I showed this to you in another video. I think it may have been on BBIG, but it might have been a different stock. So I apologize, but I don't exactly remember. I've been trying to get more news out there about stock Sarah and what it shows us. But guys, this is the failure to deliver data that the SEC is providing to us. And let me just read to you from the top. I guess that's the easiest way to explain what it is. So what is the T plus 35 theory? As quoted from the SEC, if a failure to deliver position results from the sale of a security that a person is deemed to own, and that such person intends to deliver as soon as all restrictions on delivery have been removed, the firm has up to 35 calendar days following the trade date to close out the failure to deliver position by purchasing securities of like kind and quantity. In other words, guys, when the T plus 2 fails, they go into this T plus 35 because it becomes a failure to deliver when they don't deliver on that. And they have to deliver, or they get supposedly get fined, which I'm sure is just another little slap on the wrist, by the SEC if they don't deliver on these FTDs. So we can look at this, and we can look for tomorrow, which is, today's the 21st. So today we had 3,249,918 failed to delivers due today, which is why we probably saw that pop up this morning. But guys, look at the rest of the week. Tomorrow, we have 5,062,340 FTDs due. Thursday, another 5,213,867. Friday, 5,886,437 failed to delivers. So this chart just kind of shows you and keeps a running tally of the FTDs and shows you when they're getting into like crazy ranges. And right now, they are not on SSSR, guys. How they can still be not on SSSR with all these FTDs is beyond me. But you will notice that if they do go on short sale restricted, that this SSR says on, not off. But again, look at here, the differences in price. So when our price was trading in September, back at that high, when we were at $10.35, $10.82, $10.22, all in this range here, guys, it came right after massive FTDs, 4,191,000. Go back to this chart. Now we're at 5,886,437, guys. That's huge. So I would expect if we get a similar movement to this, that our price should be a whole lot higher. And I'm really dumbfounded as to how it's not, because you'll notice that it popped as this went up. Yet we've been flat, guys, despite all these multiple pops for months. For months, we've been basically trading pretty much range bound between that $1.95 and $3 range. Occasionally, we've broken out of it. You know, we did have that little run in January where we got up to $5.19, but they immediately got it right back down again. If you look at the big picture, which is what I keep trying to tell everybody, it doesn't add up. This is a ticking time bomb, in my opinion. It really, really is. So, all right. Let's get into the next thing.